Welcome to Digital Asset News, or Dan for short. My name is Rob, and today what I want to do is, I know we're getting bombarded with FTX information and who scammed this and what's going on behind the scenes, and crypto.com, and they're pushing out hundreds of millions of dollars worth of Ethereum all over the place, and just everything that's been happening. And what I want to do is just kind of slow things down and get a little bit of perspective from someone who has been in this business for over a decade now. And what I'm talking about here is a friend of the show, Simon Dixon. And Simon, if you don't know, he's been an early investor into crypto and digital assets, more importantly, Bitcoin, and as far as back as 2010, when it was a couple of bucks. And on top of that, he's also got this little business called Bank of the Future, and he's invested into small little startups like Bitfinex, Kraken, Coinbase, Bitstamp, Ethereum, Coin Payments, BitPay, Circle, Abra, Ripple Labs. And that's just on the first page. If you just take a look here and just go to all the companies that Bank of the Future invest into, and also their disclosure of how much they've actually invested into those companies, it's 12 pages long. And I link this in the description, the website, you can check it out. But you've got, Ohane, I don't know what that is, Delaware Corp with operation based out of New York, a fintech company, about $1 million, Yield App, 310,000, not a big deal. First Digital Trust, 5 million, Exordium. Then we go to like page 2, and we go to this thing called, I don't know if you heard about this one, it's called Robinhood, almost about $1 billion there. And then Baltoro, Crypto, and of course it just, Confirm, Abra, and the list just goes on and on and on. And these, of course, are all available for you to check out. Oh, Ripple, look at that. Almost $300 million. Circle, is that right? 4 billion. Yeah, so anyhow, so Simon's got a pretty good wealth of information. We don't know where we're going until we know where we've been. So what we did is, of course, when we did this interview, this was a pre-recorded interview. It was just a couple of days ago. So I know things move at the speed of light, but the things he talked about I think are super important. And what we asked him is, the first one was, could FTX have been avoided? The next one was, what are the next steps forward? And we talk about regulation as well. And then I asked him the question is this the worst year ever in crypto? Because you have to understand, Simon has been around since, 2010. He's going to talk about when Bitcoin crashed from $30 to $3. And it was like the worst week, which, if you got to understand, like 90%, you got to understand that's a pretty bad week. 1 week. For that to crash, and for him to hold on, and the people around him, is pretty amazing. So again, this is a pre-recorded interview. It's about 20 minutes long, but I will be here as we come back, because I want to go over just a quick recap on why Voyager and Celsius cannot reorganize, and a new business is pretty much out of the question. And we'll talk about that, and then of course at the very end we'll do a little Q&A, and who knows, Simon might even show up. He's over at the UK, so a little bit later, but we will see. So without further ado, let's jump into the pre-recorded interview with myself and Simon Dixon. Let me just get out of here, and off we go. Again, thanks for coming back to the show.
It seems like the whole world's changed since we last spoke.
I thought everything was going just swimmingly fine in June of 2022, and now here we are, November, and FTX just took a big, just swallowed up the entire crypto industry. So Simon, I got a couple of questions, and hopefully you can just make sense of things. The first thing is this: we got to talk about this. The thoughts on the FTX, and where do you think we go from here? Then the next one is, since you've been here since the early days, 2010, 2011, crypto, is this the worst year you've ever seen it, or do you think like this is just one more year in the long progression of crypto? Next, I want to talk to you about the Celsius and the exclusivity re-up as they start to put forth the information for the legal process to retain their exclusivity, to get that their new plan together. And lastly, just your thoughts on regulation. Do we need it? Is it really important? Or how do we all make this work? So the first things first, my man, FTX. What happened? What's going to happen? Where do we go from here?
Yeah, so FTX is what happens when you put a short-term speculative trader in charge of one of the largest exchanges. And so essentially, Sam Bankman-Fried, SBF, the CEO, he made all his money in the kimchi premium, which was essentially an arbitrage between the fact that Korean people in South Korea were willing to pay more because of capital controls for their Bitcoin and than in another country or another exchange. And so FTX is a classic example of what happens when you take a hedge fund, a venture capital fund, an exchange, a VC investor, a market maker, a custodian, a transfer agent, and all of them, and make them one person that controls the whole process. And then you allow them to print money like a central bank. And when they print that money, they then use it as collateral to make VC investments. And then they dip into client money when those investments go wrong in order to prop up and rehypothecate and create what Dirty Bubble Media called a flywheel. And that flywheel blew up as soon as it got to the tens of billions. And unfortunately, those that hold deposits, all of those shareholders that invested in it, they get wiped out. All of those that have deposits, they become creditors, and they enter into this extremely painful process that we now call Chapter 11, where we figure out who owns what, how it gets distributed. And unfortunately, Sam has stepped down and he's in a lot of trouble.
Yeah, I mean, very well said. So this would lead me to the follow-up question. So when we talk about FTX, first of all, was there a way to avoid this situation, or was this just an inevitability? And this really comes from there's an ethos in crypto and digital asset space, which is you must do your own research. You must make sure you do your due diligence. However, we see somebody like Kevin O'Leary, Mr. Wonderful. He's got a mass amount of people to do the research for him, and he got fooled into investing in FTX. We just saw Anthony Scaramucci, the Mooch. He came on to MSNBC and said, look, he goes, I'm not going to use the word fraud, but these are the things that we're looking at right now. And he said also, we sold 30% of Skybridge Capital to them. Was there a way for this to be avoided in any certain way, other than the fact of we can always just tell people to, of course, in the retail side, make sure you take everything off exchanges? But was there a way to avoid this?
Yeah, and I've been involved in Bitcoin since $3, been through every cycle, and I still had tens of millions on Celsius, and no creditor there now. So it happens to the best of us. And really, the way this could have been prevented. So there's a difference between a bad investment and a scam, right? So a bad investment is you invested in something. A scam, which is a very overused word in crypto, because we just call everything that we don't like a scam now. But there are actually, real definitions of a scam. And so when you fraudulently, use client money and you represent that you continue to trade when you're insolvent, these are actually legal things that you're not meant to and allowed to do. And so essentially, FTX is the banking system in the 1900s. And we had to go through the great panic of 1907 to realize about market manipulation and the need to have some regulations there. And then we had to go through the 1920s, crash, boom and bust in order to learn that people, when you put all these actors together in one place and you allow them to be an exchange and a issuer and all of those things that you have, then you get market manipulation over leverage, and then people get on hold of a bubble. And then they all over-lever themselves, and then you have an almighty crash when the leverage runs dry and the price doesn't perform. So we've also seen that when you have a bank that goes bust, like in Lehman Brothers situation, you have rules for investment banks, rules for retail banks, and rules for brokerages. Right. And normally, rather than going through this painful process, you go through a different liquidation process where another bank takes over and takes on those relationships. And then you have various other mechanisms in place. So what we're experiencing right now is what we experienced, what the banks experienced in the 1900s. And in crypto, we changed the technology, but it's moving at a lot faster pace. But we've forgotten all of the rules and all of everything that prevented all of this stuff.
Okay, so Simon, it makes a lot of sense, especially what you're talking about as far as like the history. And we are actually going in reverse. We are forgetting the failures that we've had in the prior generations. But the question then would be, and I'm gonna have to skip around though, because this will make a lot more sense. You talked about the things that we could actually do. What if Because the banks, when they went through these collapses, there was parts where different parts of the government had to step in and regulation came about. So my question then would be, is what are your thoughts on regulation right now? Because right now the ethos for most crypto investors is they are adamant against any type of regulation whatsoever, which I personally don't get the whole point of why people would be around or against going against regulation as far as on just an exchange. I understand what the projects and DeFi, things like that, but the exchange itself, I don't understand. So just give us your thoughts on regulation then.
Yeah, and this kind of goes back to the SBF thing. It's really the difference between regulation, good and bad regulation for a start, and then centralization and decentralization. So what a lot of people do is they take a decentralized ideology and apply it to a centralized institution, and that's where everything gets messy. So if you look at Luna and Do Kwon, essentially you had a central banker that was managing an illegal hedge fund based upon a token, a liquid token that was backing an algorithm of a stable coin. And so you slap a decentralized sticker on top of it, but then when shit hits the fan, you realize that there's just a centralized actor that's managing a central bank and trying to do, trying to manage an algorithmic stablecoin.
Right.
Then you've got the Celsius scenario where you say, well, there's a centralized company that actually, if it was treated as a security as it was, so if you thought you were investing in a hedge fund, right. Then you would have known that you were taking risk with your money and you wouldn't have put your life savings in it. You would also have been disclosed exactly what was happening with your money. So those are all investor protections and just good regulations. Then you get bad regulations. So, anti-money laundering is just an immense amount of data collection, and then the money launderers do it all anyway through their means anyway.
Right.
And so the innocent people just end up having to give all that data. And also accredited investor, for example. So now accredited investor is just lazy regulations. It's when a lot of retail people complain when things go wrong, and then they just say, screw it, we'll just leave it to the rich people so we don't have to deal with all this stuff. But the right way of doing that is just making sure that there's user experiences like what we had to create at Bank to the Future, where you only allow them to invest a certain percentage of their net worth and you disclose the risks. So suitability and disclosures. And so what happens is you get this mixed match of all sorts of different ideologies, where you have Bitcoin, which doesn't require any regulations and is completely counterintuitive because it's fully decentralized.
Right.
And then you have an exchange and you apply the Bitcoin ideology to the exchange when really you could have had segregation of client assets, suitability, disclosures, auditability, disaster recovery, business continuity plans, custody versus investment. And all of those are good things to protect you. And you take those out. But then you've got one more part of this. There's obviously corruption in regulations, and there's no perfection in regulations as well. Otherwise, it wouldn't happen in traditional finance. And so you need an exit, which is where you need the decentralized. So if a CBDC becomes predatory in a regulated environment, then you need an exit to Bitcoin to compete with. If you have a centralized exchange that's becoming, overbearing and counterproductive, you need a decentralized exchange to compete with it. So this whole application of different ideologies, you almost have to take your head and apply it to a different, filing box when you're thinking of different things. And it's that crossover that causes all the issue.
Yeah. So, to me, it sounds like, we can have a little bit of regulation. We can have the best of both worlds, but we have to temper it just to make sure that we don't have over-regulation. There's some things that actually do work out pretty well as far as regulation goes. And that would actually, just to talk real quick, this is from, I guess, one of your initial investments, Jesse Powell, one of the former CEOs of Kraken. And he put out a great tweet. This will be a link in the description. And on number 11, he talks about this. U.S. lawmakers and regulators have some accountability, as he's talking about the different problems that are arising in the centralized exchanges. He states, you drove this business offshore because you refused to provide a workable regime under which these services could be offered in a supervised manner. Enforcement wrongfully focuses on convenience, off or onshore good actors. And what he's trying to get to, the point right there, is that we can have regulation. We'd like to have regulation. Just give us some guidance a little bit as far as some clarity, and we can move forward. I think what you just said, correct me if I'm wrong, is that we can have both of these things and it can actually work. We have to make sure that they actually are tempered.
Yeah, you absolutely need regulation of centralized financial institutions, and you need to embrace the technology. Otherwise, you lose your competitiveness.
Sure.
And so there's that balance in between where the US and jurisdictions like the UK, I remember we spent 3 years in the early days trying to secure a license to allow companies people to invest in Bitcoin companies. It took 3 years, and then they ended up saying, well, you can only work with UK companies and UK investors. And there were no UK Bitcoin companies and very few UK investors. You needed a global solution. So we had to go, literally, I had to move house, get regulated with a more globally minded regulator. So that certainly does happen. It can drive people to different jurisdictions in order to get what they want. But at the same time, there are a lot of regulations in the US that these companies are just not complying with. So if you look at the Celsius situation, they had an earn account where you were investing in a security, and there should have been full disclosure, and you received a yield based upon risk. That's a security. There's loads of securities laws already. With lending, they had crypto-backed lending. You can fit in with traditional lending regimes. It makes you have plans, collateral, all of that still works, whether the collateral is crypto or not. And then you have custody. Custody is just segregation of assets, making sure that they have title to it, and segregating those closely. So all of those regulations exist. It's just that in the US, you have that little bit of, is the underlying cryptocurrency a security, or is it a currency, or is it a commodity? But once you figure that part out, then you can just slot it into the existing regulations, or you can do what's happening in a lot of countries right now, which is virtual asset service provider regimes, putting together the right regulations for the right technology.
That makes a lot of sense. If we can get that done, first of all, we should have already had that part done, and then we wouldn't have all these people going to Barbados and the Virgin Islands and just kind of sidestepping. So, Simon, before we get to I'm going to switch things around again. Before we get down to the Celsius issue, I want to ask this one main question, which is this. You've been around for quite some time. Bitcoin at $3, for example, 2010, 2011. Is this the worst year you've ever seen in crypto, or is this just one more year?
Yeah. So I have been through the $30 to $3 crash in a week. That was a pretty rough week. This one's pretty rough, but it's the same thing that we see time and time again. But each time the numbers get bigger and the number of people get bigger and the stakes get bigger. So as we're getting bigger and bigger adoption in every single cycle, it feels more chaotic because there's more people involved, and the crashes just get more spectacular and the products get ever more sophisticated. So I would certainly say that this has been one of the most, for me, it's just been business as usual, because I just dollar cost average every month, no matter what's happening. And I have a set strategy, and I never deviate from that strategy, no matter what the market's doing. But however, I have been dealing on Twitter Spaces with, people that are from one extreme to another, that have been suicidal, and some have actually literally committed suicide. Yeah. And so it's been a very traumatic year for many people because of a number of reasons. Firstly, the traditional markets are giving people massive financial anxiety. And then the crypto markets, we've seen our normal cycle, which is that you get, a pump cycle based upon something that happens in traditional markets. Then you get a lot of innovation and a lot of new adoption and a lot of excitement. And those people haven't learned the lessons of the past, so they put all their money on an exchange. That exchange makes a bad act, whether it's a hack or a fraudulent activity. That then leads to a big correction and fear that then leads to a regulatory crackdown. And then you go through the cycle again, and you tend to then go through a building cycle. And then that leads to the next halving cycle with Bitcoin. And then you get everyone trying to find the next Bitcoin killer to try and get more and more returns. That then leads to the next bunch of people that pump in, that are just here for the fiat currency, not here for the mission. and then you just repeat the cycle. But each time it hits new all-time highs, and then you get more and more people, more adoption, a bigger market cap, and the more money involved, the more people come along. So I expect the same cycle again, but this was a rough year. And unfortunately, we all learn best through experiential learning. And there's nothing that teaches you more than losing your cold, hard money, putting your neck on the line, and experiencing a Chapter 11 process, because you will learn a lot more from that, or you'll exit the market.
Yeah, and then it's perfect. And the great thing is that we have time. I think we have time, especially with what's happening. There's two things actually to bring up before we get to the Celsius issue. First of all, when you talked about the rules, the things that you do, and you don't deviate, you can't see it right now, but I have the rules up right below me, and it's always the same thing. Don't invest more than you can afford to lose. Everything's a scam until proven otherwise. Don't leave anything on exchanges. That's why I have 0% exchanges. Don't use leverage. 1500x is a little bit crazy, and take profits along the way. And then also, just like what you talked about, just don't deviate. Just stick to your schedule. Everything works itself out. People don't learn the lessons. It's all cycles. There's always a bear cycle. There's always a bull market cycle. 4-year cycle still intact, and we'll see how it works out. And back when Simon was picking up Bitcoin for nothing in 2011-12, they went through their first cycle, having all-time high dip reset. 2016 to 2019, the same thing. We had a halving, all-time high in 2017, a dip and a reset. Then again in 2020, we just hit our all-time high last year, 2021 in November. Now we're going through a dip. We're going to see probably further losses. I am assuming. Then 2023, who knows what will happen. 2024 will be a halving. I can guarantee that. And then all-time high potentially in 2025. Not to say that's going to happen, but that's just what we have. And then Simon, to finish this up, let's get to the big stuff, which is this part here, Celsius. So we know you've been going through a lot of different motions, a lot of things to get a plan to actually work. I know Celsius is trying to get their plan in action. Kelvin, I personally don't think it has a snowball's chance in hell of actually making it work. And here's what they've come out with just yesterday. Celsius today filed a motion requesting approval to extend the exclusivity period in our cases. This is the period when Celsius has the exclusive right to submit a plan of reorganization. I said, basically, look, if you haven't got one out and since June, I mean, Simon's already had like 3 or 4 iterations of these things. So if you're telling me that you can't get it out in 4 months and need another how long it does, you're just using up my money, your money, and everybody's money just to pay the insiders. Simon, talk to us about this real quick, and any updates on the plan that you guys have moving forward for Celsius.
So it's been one heck of a journey since we last spoke. But in a nutshell, I've learned a lot about the Chapter 11 process, and kind of just from speaking to so many people, understanding so many creditors, understanding the people that have the most on the line, and being the 21st largest creditor myself, I was always thinking about what would I sign off on. So I've got Bitcoin. I'm probably going to lose 50% of the Bitcoin that I had on Celsius. It's only a percentage of my net worth. So it's not disaster for me because I was using those principles. But what am I going to sign off on? And eventually put together a whole plan around how the funds that are left, you just give it to people in custody so that they can then withdraw it. It doesn't create a bank run because you get the segregation between investment money, custody money, and people learn those lessons. And you give them a security, and the security is taking all of the assets that Celsius essentially bought with our money, and giving them all to creditors. So that in the next run, in the next bull run, if the market recovers and is managed well, all those assets should start to perform. So what we've learned is that there's only really two outcomes that are feasible. Firstly, the company, if it did have a reorganization plan, as you said, if that was the priority, it would have been released by now. But regulators are looking at this. There's 60 state regulators. There's the SEC. There's the CFTC. There's the FTC. There's the DOJ. And really, we've only got one shot from my perspective to give them a regulated model where any custody, if they allow us to get out of this, then custody has to be regulated custody, investments have to be regulated securities, and lending has to be regulated lending. And so we put together a process whereby We've put all that together, and we can bid on the assets and then give all the assets to creditors rather than us being a predator buying up all those assets. So this goes full circle into the FTX scenario. So FTX had a big hole. So they were trying to go around to Voyager and Celsius, bid for all those assets, and then be able to fill their own hole by giving it to their shareholders. Essentially, we flipped the process on its side and said, well, how can we utilize this process? And we created two things. Firstly, a way of using the bidding process so that you can bid and then give all the assets to creditors rather than to your own shareholders. And then also at Bank to the Future, we've learned a lot about the bankruptcy code and securities laws, is what we've been doing for a decade. So we've created a new product where creditors can actually import their claim on Celsius and then use it to dictate who wins the bid. And so they can back a bidder, and then that bidder will go to the voting process. And if you don't like their plan, then it doesn't go through. So you can. We've tried to use financial technology, as we always had in these disasters. And now there's so many companies in Chapter 11 that we think we're going to be utilizing this for a lot more clients that are in a queue right now, so that we can just really try and get all of those assets and make sure they go to creditors rather than a predatory bid in the worst market just before Christmas, 2 years before halving, in a regulatory crackdown and a disaster market.
I got to tell you, this will be the time, right? I think this is the right place at the right time. Imagine if we were going through this and we wouldn't do it, but during a bull run, if we can get this taken care of now before the next big bull run, that's huge. And then we don't have to deal with the regulatory issues. We don't have to deal with the exchanges doing the funny business. We can really make a big dent. I like that. Simon, before we take off, do you have an example of that? On your website already?
Yeah. Oh yeah. So on Bank to the Future right now, we created on my YouTube channel. I created a video with a message to Judge Glenn. So on the Simon Dixon YouTube channel, and on the second half of it, I gave some screenshots and demos of how you can import your Celsius claim. We'd be able to do it with your Voyager claim, probably your FTX claim, and then probably your BlockFi claim, and then maybe your Nexo claim, wherever this goes next. And then companies that want to do right by the community can allow you to allocate their bids. So yeah, there we go. That video there. I gave a few slides, and I'll be in future videos. We'll be demoing the actual feature. But it's go to banktothefuture.com. Verify and certify your account ahead of that. So if you're a creditor in any of these companies.
Perfect. All right. I will link that video in the description for everybody that can check it out. So Simon, I know you're a busy guy, but thanks for stopping by. It helps to alleviate some of the pressure that we see, especially with the wisdom that you've had throughout the history of crypto. So thanks, Simon, for stopping by.
Okay. Thanks for having me again, Rob.
All right. I'll see you. All right. So I hope that made sense for what Simon was talking about. Again, you can't know where you're going until you know where you've been. And Simon's one of the very few people out there that can tell you where we've been. He's been around since 2010. And it seems like, I like Simon Dixon. I like what he stands for, but you got to take it with a grain of salt, because you never know. It seems like some of the most trustworthy people are the ones that just have been around for a long time. I know people, they get a little perturbed at some of the rates of Coinbase. Coinbase has been around a long time, and if you take a look at some of those rates for the exchanges, yeah, it was high, but what's higher? Coinbase is whatever it was, 0.5 to 1.5% per trade, or was it the 0.2% for FTX? Oh, plus 100% of all the different cryptos that you lost. So again, I think just time in sometimes is just a little bit more important. Anyhow, that concludes the interview. And I just wanted to follow up and just talk about a couple of things. First of all, if you're looking for the video that Simon was talking about, let me see here. This one. He talked about this video in particular, where he showed you snippets of his website, where you could register it for anybody who is going through an exchange that is going through Chapter 11, which, hint, there's going to be a lot more coming up, I think. So if that would apply to you, Voyager and Celsius users, first of all, watch that video, and he gives you examples of that. That video is linked in the description on top of Simon's YouTube channel as well. And then also, I just wanted to bring this to everybody's attention, because I know there's like some people they say, well, what if we could just reorganize? What if we just reorganize this, reorganize that? I think once you're in Chapter 11, especially in crypto and crypto exchanges, I think you're just screwed. And this was from the Voyager town hall meeting, the Voyager UCC meeting, which was like about a week, maybe 8 or 9 days ago. And this is the legal team talking about why Voyager did not reorganize when it would have been easier to do so. And I think a lot of people will think about this is going to happen with Celsius. I don't think it's going to happen. So just listen to this. It's about 2 minutes. Then we'll open up to the Q&A.
I don't want to get too far into the weeds on your question, mainly because, there's always different permutations and different flavors that bankruptcy cases take. But specifically, I think what you're suggesting is that there may have been a way to sort of save the Voyager platform such that we didn't need to liquidate, which agreed. This basically is a liquidation. I mean, FTX is essentially acquiring customers, and they happen to also be monetizing the crypto. There's no question there that that's effectively what's happening. The problem with, and this really goes to the standalone plan concept. Some of you may have heard that term being thrown around at the beginning of the case. That was the initial plan that the debtors had filed, which basically called for Voyager to continue. What you have to understand, and this is public information, you can look it up on every state's website, Voyager did not have the appropriate regulatory licenses that they needed to operate their platform in a number of states. And that is why a number of states, including New York, are investigating the company and probably some of the individuals. I don't know what they're doing exactly. It's the states that will do what they want. But it basically made it so that it would be virtually impossible to reorganize this company because you had a company that was operating illegally. They didn't have the licenses that they need to operate. And once you already have gone down that path, you can't just fix that and get the licenses. The states are going to come after you. And so from our perspective, from the committee's perspective, there really was no way to sort of save the Voyager platform as you know it today because of this regulatory overhang. That was the big concern. I'm not sure if your DAO example was directed at some other construct, but if it was how we could have used creative crypto organizations like DAOs to sort of save the existing Voyager, it really wouldn't have worked.
Okay.
Does that make sense?
No, it makes sense. It makes perfect sense.
You'd basically have like another Voyager with states coming after them,
Right. Yeah. Well, I mean, what you just highlighted was news to me.
Yeah, news to me too. So I don't know if you were aware of that, but apparently Voyager was doing illegal activities. That's why the states were going after them. And of course, we saw different states also go after Celsius as well. So again, if we're talking about reorganization, I know we're jumping around a bit, but I just wanted to bring this to everyone's attention that if we're talking about reorganization for a Celsius or Voyager, that's not happening. It is not happening. And it goes to my point again. I know people don't, I know some people don't like it, but the majority do, which is when I talk about clarity and regulation for exchanges, I have done multiple polls on my channel, on YouTube, on Twitter, and it is 85 to 90% who say, yes, we would like some clarity and some regulation for these exchanges because they keep screwing us. I understand about the whole products and things like that. I don't want to get in the weeds here, but I'm just saying, I know as people are going to be vocal in the comment section, but you're not the majority. You're just not. And I think that these regulation, especially now, I'm tired. I'm tired of playing in the kiddie pool. I'm tired of not moving things forward. I'm tired of not being able to get past these people who keep screwing things up just because of greed and ambition and incompetence. That's it. So anyhow, that will conclude my rant and also today's video. So look, if you like today's video, give it a thumbs up. Also consider subscribing. A lot of things to talk about are very time sensitive, especially right now. And if you're in crypto right now, you have to understand this is not a set it and forget it. You've got to be on it. You've got to do your daily information or wherever you can get it. And I think that's why you should probably subscribe to my channel. And that's it for today. So look, that concludes the news and all that good stuff. Now let's get into a little Q&A. I'll answer all your questions the best of my ability as we go from there. But you got to take off. It's football Sunday, so get out of here. And that should do it. Now, let's go to a little Q&A, shall we? Let me get this banner out of here.